Good. So I think we are good. Welcome to Beginners Mentorship Sessions, Session 2. The vision behind this is, I know that for some of you, a lot of the, what's what I'm looking for now? A lot of the stuff that you've been seeing us do in the mentorship sessions has been a little bit confusing. And that's intentional because we intentionally wanted to give you the opportunity to be exposed to some of that stuff anyway. The language, the speech, the trade setups and everything. It's like a child. Before you learn to speak English in a family, you hear your mom and dad speak English, right? You hear your elder brothers and sisters, if you have any, speak it. And so before you get officially trained in this is how to speak the language, you usually already started to gain exposure to the language being spoken about you or around you. So that when somebody comes around and starts to teach it to you, practically or systematically, you already have the experience in it that you need. So, welcome to the. Now, for those of you who were here last week or last session earlier this week, we spoke about the 3 fundamental keys, right, to for trading as a beginner, things you need to understand and know even before you start trading, before you place your very first trade. And who can remember what those 3 things were? For those of you who were there, and take yourself off mute real quick.
Am I allowed to refer to my notes?
Yeah, I'll let you refer to your notes. Yes, just this once, because I'm nice like that.
Was this what you're talking about? The times that we would
I don't know. All I know is that I told you the 3 major things that you need to succeed as a trader. And
okay.
You remember what those things are?
You said technical. What's the word?
Technical what?
Technical knowledge.
Technical knowledge, yes. And what does that mean?
So to know about the market is a kind of speech, the language.
Basically, to know what you're doing when you come trade, to have some idea, some understanding of what's going on. Yes, carry on.
I think it was discipline, if I'm correct.
Discipline and a couple of other words that I put in the same box as the discipline.
Sorry, I'm trying to remember. I'm trying to do this one without my notes. That's why.
Okay, so look at the notes so we can move on real quick.
You said risk management and money management.
No, that was part of the discipline structure.
Oh, we should say the next one. The next one was when to trade. So time of day.
All right. For the sake of time, I'm just going to go through this very quick. Number 1 was technical knowledge.
Oh, structure and order.
But 2 was discipline. No, it's still late now to try and be the star student.
No.
No. Your time to shine is come and gone. Number 1 was technical knowledge. Number 2 was discipline, structure, and order. Number 3 was good psychology. Right?
Yeah.
Now, as a part of the discipline, structure, and order, we talked about risk management and money management, about your maximum 1% risk, your reward to risk ratio being at least 3-1, and preferably 4-1, knowing what times of the day, the week, and the month, and even the year to trade and all that stuff. And all those were subsets of the discipline and structure and order, and also to a degree, subsets of the whatchamacallit of the psychology.
Yeah.
And I gave you the example that, for instance, every year I shut down trading in December and I don't start till February. Yeah. This year I didn't start till March. Of course, there's plenty of money to be made in that period, but when I had enough faith in the structural systems that I've put in place to know that I will make the money I need to make through the year. In essence, do you know when to walk away is the question. And there's this old song, you know when to hold them, when to fold them, when to walk away, when to run. no matter how much technical knowledge you have, we looked at this at 25% at best. 25% of the success formula for trading is comprised of the technical element. Means you can, and I gave you the example, remember, from a day where I got the technicals right, did my analysis right intentionally on my demo to prove a point, and showed you how without discipline and without good psychology, meaning this is the psychology. You plan your trade and then you trade your plan. You don't get caught up in stuff I'm going to talk to you about today, fear and greed and all those things. You're able to analyze unemotionally, right?
Yes.
Make up your mind, this is what I should be doing. And then you're able to execute that analysis also unemotionally. You're not affected by the charts moving up and down and left and right and all that stuff. So the psychology bit is pre-trade and during the trade, you can control your humanistic emotions. Does that make sense?
Yeah.
You can control your humanistic emotions to the point where you don't let them get the better of you, and you don't let them be responsible for what should have been a good trade in some cases becoming a bad trade, or what should have been a great trade becoming only a good trade. Because I showed you with the risk to reward ratios that you can actually lose more trades than you win and still make money if you stick to certain rules. Sometimes one or two out of every 10 trades, there's 1, 2, maybe 3 that will really, really pay you. In fact, that is a good place because today I want to focus a little bit more on the psychology element. So just give me a quick second while I get my charts up and running. My computer is just having a mind of its own today. This other video that I'm trying to export at the same time is really distracting me because my program is not working. And so I'm just going to quit it now and focus on this recording, and then I'll try sort it out layers. Right, that is a very loud sound from outside my window. Anybody's supposed to be social distancing while you're out there making noise. All right, so I'm going to ask you to put yourself on mute now, everybody, if you don't mind, so that my mic is the only one picked up by the recording. Right, can you see my charts now, everybody?
Yeah.
Okay, good, thank you. So you can take yourself off mute now. And those noises you hear are my 4 different trade accounts all coming online. So if you look at the bottom of the screen, you see the bottom of the screen here? I got 4 different trading accounts. 2 are demo, 2 are live. So I am going to try and shut this volume down because those sounds are getting on my nerve. I have no idea what my computer is doing today. I left it on for like a month. I think it's finally starting to say mercy. All right, so there we go. Right, so let me get a fresh page. Now this actually, well, I'm going to show in the second hour of this when I do the live analysis, I'm going to come back and show you what I do this every week, where at the end of the week, I look at what price did last week, whether or not I took it or not, whether or not I won or I lost. I always go back and I review what happened. The reason is, if I review carefully what happened, whether or not I was on the right side of the happening, I'm better placed to, 1, correct any mistakes I made for next week. But also, I know if I did do well, I know how I did well, so I can repeat it. So it's not just a flash in the pan. So we're going to come back and look at it. But for the sake of this I need to find a blank chart that I can write on. Okay, let's use this one. Let's use this one. Let's use this bad boy here. Good. So let's get rid of that. Get rid of this. And again, why do I like to write the notes on the charts? Because again, I want you looking at charts till they start speaking to you. So I'm going to do everything I can to put a chart in front of you, even when I'm not using it. So today, I want to talk to you about the 4 drivers of trading behavior. Again, the 4 drivers of trading behavior, or you call them the 4 drivers of trading psychology. And the truth of the matter is, they don't just apply to trading, they apply to almost every aspect of life. But I'm going to use them within the context of trading because that's what we're doing. Why am I taking the time to do this with you beginners before I start talking about the actual technical stuff that the advanced guys have been learning for months? Because I don't want you forming some of the bad habits some of them have, right? Some of the guys that we train in the advanced group have horrible habits from years of bad trading. It's like learning to drive on your own before you actually take a proper driving instruction course. You're going to have a horrible habits that your driving instructor needs to correct. And this I found out. New traders that I've taught to trade using our methodology in Israel Keys and the way we do it, they always hit the ground running. They seem to have very little problems because they learn the right way. The ones who keep losing for so long until we get them corrected are the ones who brought horrible habits from their previous trading instructors or experiences. And so before I allow us start dealing with the actual technical stuff, like I just showed you last session, which is only 25% of your success equation, I want to make sure we are on the right footing as regards not making some of these horrible mistakes. And so the 4 drivers, you can still see my charts, right? With the writing on it, right?
Yep.
Right. So the 4 drivers of trading, actually, no, that should say trading behavior. 4 drivers of trading behavior. Driver 1 is the one thing that most people come to trading for because they saw somebody's Instagram account. That's why I don't like the guy. You know, the guys, I keep calling them the cowboys. They spoil it for everybody. They see someone's Instagram account or someone's advert that is materialistic, is unrealistic, is designed to create one emotion. Who can guess what that emotion is? It starts with G.
Greed.
Greed. I was going to say, and it rhymes with need. It is greed, right? Most people come to trading thinking it's the silver bullet, and all they need to do is learn some fancy system, copy someone's methodology, that there's some guru who's promised that he'll give them all they need. He'll tell them every single trade they need to take. The guru's probably living in his mother's basement, only trading off a demo account, never live, has never made real money, read a few books, watched somebody else's webinar on YouTube, who also himself was in his mother's basement, and decided the quickest way to be famous is to try and be a YouTube or Instagram trading superstar. And so they borrow someone's car, they hire a car, hire a suit, they look all fly, you know, with a Bentley in the background that they borrowed per hour, they paid per hour for to take the picture. You come in thinking, I'm going to place this trade and I'm going to just make all the money that I need. You probably over leverage your account. We'll talk about leverage, but we also discussed it in the Foundations to Forex series on YouTube. They over risk, they over trade, meaning they're taking 10, 15 trades a day because they want to make all the money. And this is the statistic. It's called the 90-90-90 rule. All brokers know this. That's why they trade against you. 90, 90, 90 rule. Who can guess what this 90 rule is, or who's heard me say it before? Who's watched one of the advanced videos where I've said it? It is that 90% of all new traders will have burnt through 90% of their account in the first 90 days of trading. Let me repeat that. It is a statistic that 90% of all traders burn through 90% of their account in the first 90 days when they begin to trade. Let me say it one more time. I want it to sink in. 90% of all traders, new traders, burn, if I even experienced traders when they open a new account, burn 90% of their equity in the first 90 days. And this is the primary culprit: greed. These 4 things I'm going to show you today all have chemical reactions in your brain. They all do certain things to you when you feel them. Greed makes you ignore the potential of danger and only focus on the potential of success. It is quote unquote irresponsible faith. Greed makes you look at the market and only see all the money you can make. Oh, so you probably tell yourself, well, if I'd bought here and sold here, I would have made 197 pips. So the next time I see that there, so you come here, right? And you think, aha, this is the same thing. I'm going to make 197 pips, right? What happens? No, you don't. You get here and it goes against you. And so most new traders come in with greed. My instructor has taught me the silver bullet, let me go make all the money. And then when the markets beat you up for a while, when you've gone to 3, 4, 5 losses, when you burned, say, 40% of your account because you were over risking, and so each loss was 10%, and so in 4 trades, you lost 40% of your life savings and the money that you borrowed from your neighbor because you were going to double it and pay them back, remember? Then the second emotion sets in. Who wants to take a guess as to what the second emotion is? Yep. Like greed, it rhymes with a word that starts with N. In this case, it's a word that starts with F and it rhymes with near. It is the word fear. Fear is the exact opposite of greed in the sense that all you now see is all the potential to lose your money, and you no longer see the potential to make money. It makes you careful, but it's also destructive because now you can't spot opportunities properly. You can't take responsible risk because there is always going to be risk in trading, which is why we have the phrase, remember this, your risk to reward ratio. Good to see you, Chance. Your risk to reward ratio. As you come in, just put yourself, you can say hello, Chance, and then put yourself on mute. Your risk to reward ratio, because there is never going to be a time when you are in the market when there's no risk. Even with the best technical setup and the best technical analysis and knowledge, the perfect trade can go wrong. There can be a natural disaster, a plague, a pandemic. A president or prime minister can make a statement. A company executive can be caught for fraud. A banker at Goldman Sachs who has 10 billion in equity that he's controlling could be going through a divorce and make an irrational trade. But because he has that much equity under his control, it will affect the market. So there is no such thing as a perfect trade. There is always risk, which is why we analyze what's the risk to reward ratio. We want to put the risk to reward ratio at a level where you can be wrong more times than you're right, and you shouldn't be if you learn the technicals properly. I am batting on average 75%. And that's because I take some risks that some people who have my knowledge would not take. If I wanted to be extremely careful, I'd probably be doing 85% because the technical analysis can, like for instance, on Friday, you guys saw in the group, And I posted a signal, and then in 1 minute I took it back and I said, hold on a second. I've seen something that says while this is textbook, there's something wrong. The daily bias is in the right way. Everything about it was perfect. But what the market did in the Asian session told me something's happening today. And as we saw, this was the day in question. As we saw for the rest of that day, price didn't go anywhere. Let me find the shape. So it was what we call a Z day. Price just went sideways there. That's the day in question. Now, experience told me based on what happened in the first part of the day. So from this line here to here told me stay away. Something just looked at it, I said, I've seen this before, stay away. And as you see, price just didn't go anywhere. It was just trapping people in. Now, that kind of experience doesn't come overnight, but you can get there. And you can eventually start to bat between 65 and sometimes I know people who bat 90% because they only ever take bread and butter. They may not trade for 2 weeks. They don't like to lose. So they wait for the perfect setup. Even the perfect setups have once in 10 tries where something goes wrong. But even if you are losing more than you're winning, if you have greed and fear in the right context, the balance, your risk to reward ratio will protect you. You're not greedy means you're not blind to risk. You don't see what is wrong, but you're not afraid, meaning you're not blind to potential benefits. You don't see what could also be right. Does that make sense? So the first two emotions, greed and fear, they both create chemicals in your brain. Greed makes you act too quickly. Fear paralyzes you. So before you enter a trade, and I need you guys to go back and listen to this over and over and over and over again over the next few weeks. It will save your life. Before you enter a trade, greed will drive you to move too quickly. You won't check your stop loss if it's within your risk tolerance. You won't check your daily bias. You won't do all the checks I showed you last time as an example. You just say, oh, price is moving. I want to make money. Boom. And before the trade, fear will paralyze you. Where there is a perfectly good setup, fear will make you say, I don't know. Well, this could be wrong and that could be wrong. And then before you know it, price has done what you suspected it would do. And they have a way of feeding off each other. If you were greedy on the first trade or one trade and it went against you, you're more likely to be fearful on the next trade because you have the bad experience in your mind. If you were fearful on the first trade and a perfectly good trade you knew was going to work, you miss out on, then you're more likely to be greedy on the next one because you don't want to miss out on it. Just type in the chat and let me know that you're tracking with me. After you enter a trade, so I'm watching the chat, just let me know that you're following me. After you enter the trade, they flip. When you're in the trade, greed makes you slow to act because you think the trade is going to go on forever. And it went well, and I'm going to make more money and more money and more money. And so when you see stuff that you should, okay, this is a sign this trade has gone as far as it'll go. Let me close it now, or let me take some profit now. Let me move my stop loss to 0 to mitigate my risk now. Greed says, no, Hakuna Matata, it's going to be all right, going to be all right. When you're in the trade, fear makes you OCD. That's the example I showed you from the experiment I did last week where the trade was going the right way, and I kept opening and closing it back and forth, and I lost 4 times. If I just kept it going once, it would have made the money. But I wanted to simulate what fear does because, oh, I don't want to lose money. And one of the major things that greed and fear do, right? This first two, let me put this here, is greed and fear. They cause you to over leverage and over risk. What is this? I'm glad you asked. Over risking is obvious, right? I showed you guys last week. If you're a new trader, you should not be risking on any one trade more than 1% of your account. I don't care how good it is. I don't care who gave you the trade. I don't care which superstar trader gave you the signal. I don't care that you know it's going to win. Never, ever, as a new trader, risk more than 1% on your account. And when you become an expert, never risk more than 2%. You will never see me risking more than 2% of my account, because I know that the market can do anything they want at any time. And so over risking means, because you think this is a winning trade, you will over risk. Over leveraging is relative. It's the fact that you are, quote unquote, entering a position size too large. I really need to touch you guys about, you know what, let's leave leveraging for now. Those in a week or two, when you come back and watch this again, over leveraging will make sense, because I don't want to have to define leverage here when I've defined it already in one of the other training videos that you probably have or soon gonna have. But basically, what it simply means is you are entering position sizes that are too big, meaning the potential to lose money is too high, and or even if your quote unquote risk is not too bad, you are likely to be stopped out of the trade, or your account is going to go into too much drawdown to the point where your broker will say, this position has to be closed because there's too much money you're borrowing from us to facilitate it. We'll talk about leverage later. So greed will cause you to over leverage and over risk. The flip side is, when you have over risked and over leveraged, it makes you more susceptible to fear. So if you're trading live money, you took your pension fund and you put in the account, and we talked last week about how much money to put in the account, the maximum amount of money you can lose in one go and not lose sleep. multiply that by 100 and then put in your account. What's the maximum amount of money you can lose? I use the word maximum because you don't want it to be too small that it doesn't make you make. If, for instance, if I'm going to lose 1 pence every time I make a loss, I wouldn't check my account, my charts that well. My analysis would not be thorough, because I know if I lose, I'm only losing 1 penny. A penny makes no sense to me. It makes no difference to me. So, but if I said, say for me now, say $100, I'm not going to be depressed. And, you know, I was joking last week, and for all the animal lovers, I'm a dog lover myself. But I was joking about, if your dog ate that amount of money, would you want to eat the dog? $100 isn't going to send me into medical depression, but it will make me think, what went wrong there? For you, that could be $5, that could be $2, that could be $1,000, depending on your level right now. What's the maximum amount of money you can lose and still be sensible or unemotional? Multiply that by 100 and put in your account. Planning to only risk 1% per trade, meaning for every trade you take, and for the total of trades a day you take, you can maximum only lose the maximum amount of money that you can lose without wanting to shoot someone. Type if that makes sense. Now, if you're over risking, so for me, let's say that's $100. If I'm in a trade where my stop loss could be hit for $500, I am going to be more afraid in that trade than I would be if my maximum stop loss was $100. Because I have more money than I'm comfortable losing at risk. Fear finds it easier to control me. Type to let me know you're following. And so, a perfectly good trade that if I'd left alone would have made me money, I will close too early, because once it starts losing, I've lost already more in the first 5 minutes of the trade than I'm comfortable losing. So in 5 minutes, I'm down minus $150. Oh Lord, have mercy. I close the trade. 6 hours later, I come back, the trade has made $500. But the reason I was irrational was there was too much money at risk. And so, like I said, greed and fear are twin brothers that are opposite but the same. And they feed off each other in a vicious cycle. And you want to avoid them. And so how do you avoid greed and fear? You do that, again, by money management and risk management. You do that by checking your motives coming into trading. I'm not coming to make my life savings in one day. You understand, it's a journey, it's a process. I will get better at it, but I am not going to be a superstar overnight. I'm not trying to make my entire month's salary for my rent in one trade. I will lose some money every now and again. I'm not going to be perfect. I have to make room for that. So that's good to see you, Edna. So that's greed and fear. Now, the next two, actually, let me align it this way. So that's greed and that's fear. Now, the next two drivers of trading behavior, and like I said, in general, just human behavior as a whole. So let's put this to the side, 3 and 4. This is a word that starts with P. Who wants to guess what it is? Somebody take yourself off mute and shout the guess. Let's see if you're right. It starts with P. Who wants to guess what this word is?
Pressure.
Pardon?
Pressure.
It rhymes with pressure.
Pleasure.
Pleasure, yes. Or treasure. Pleasure, pressure, or treasure. It's the word pleasure. Now, the next word is functionally, for the purpose of trading, is technically a synonym for pleasure or for pressure, but it's a different P word. But it technically means in trading the same thing as pressure. In fact, you know what? I may change it. Yeah, I'm going to change it because it rhymes, right? Pleasure and pressure rhyme. So, but pleasure is the feeling you have when everything is hunky-dory, right, folks? Type, let me know, put your on mute now. When everything's nice, when you're chilling at the crib, you're watching a nice movie, you're sipping on some pina coladas, life is good, you look outside, there's a nice car, there's money in your bank, your children are amazing, your spouse is beautiful, or your partner, whatever it is. You think, you know what, I'm living the life. It's pleasure. Pleasure makes you relax. It secretes hormones that cause you to slow down because you don't want to end it. If you've ever had or known anyone who's ever had a drug addiction, you know how hard it is to get them off the addiction because whatever brings you pleasure addicts you. You want to stay in that moment. Now, let's go back to this account here. Which one? That one? Not that one. Not that one. No, this one here. But where is it? Yeah. So now you can see these, right? This arrows here, this lines here. Every time you see this, this is the sign that a live trade was taken. So I took a trade on Thursday, sorry. I entered here. My stop loss was down there. Whatchamacallit now? Actually, when I first started the trade, the stop loss was a little bit further down. It was down here. It was about here. This was around here, inside, halfway in that wick there. And then at some point in the trade, when this low here formed and it moved up, I now moved my stop loss to exactly that level before it went to my take profit. So at this point, when I enter here, this is all you would have seen. Because that hasn't formed. This is all you would have seen on the chart, right? Can you see that? That's what my chart would have looked like. As the price began to move, let me show you what begins to happen. As price begins to move, you see it's going up, right? So I instantaneously have a pleasure reaction. Something is happening that I like. And you probably will see, at the bottom of your screen, you see your money just, so this was the trade here. This one here. It's on the, I told you guys, I started a micro account for $100 to prove to you guys that you can start small and grow big. So that's the account there. So I took 2 trades that day. One was an erroneous trade. I told you guys that I made a mistake. I forgot I wasn't on my demo, put this trade in overnight at the wrong time of the night where you shouldn't be trading anyway. I woke up one morning and realized, oh, snap, I was so sleepy. I entered the trade on the wrong account, not the right one. And so I closed it immediately, waited for the right trade. And then, so I lost 1%, made 7%. 6% for the day ain't bad. It's only $7, but it's 7% of what I started with, which is $100, right? 7% a day, you become a billionaire soon. Now, this figures would have been moving in real time. If I come here, you see the trade there, and you can see it going up, up, up. Now, on my other account where, you know, each trade is worth like 300, 400, 500 per win, to instantaneously see 500 pounds show up or dollars show up on your screen, like, wow, this is good. It's pleasure. And you relax. You stop watching for bad signs. You don't want to take any action that stops it because you expect it to keep going up, right? This is the problem. All of a sudden, and so it went up till there. It started coming down, but it hasn't reached my stop loss yet, or my entry point. For all intents and purposes, this green line here is where I keyed my trade off. So you see, that's very near that. That difference is the spread. That green line is where I told myself, when price hits that line, I'm entering the trade. For those of you who are a bit more advanced, if you look at my teaching on consolidation, manipulation, expansion, retracement, and target, you'll see why I have that green line there. It's the average price in my mind. That's the line from which I think price is going to go up or down. And so as long as price is above that line, I'm happy. See, oh, pleasure, good. And then what happens here? Price starts to drop. I'm still okay there. Yeah, it's going to keep going up. It's just dropping a little bit. Okay, oops, it's getting worse. Snap. Now I'm in a loss. Like I told you, my initial stop loss when I started the trade was here. Let me draw that out. This was my initial stop loss. There was my initial stop loss, roughly. Can you see how close that gets to my stop loss? And this is why we study psychology. Because at this point, you're likely to think, well, let me just save this extra money here. Since it looks like I'm going to lose, so I might as well just get out here and save the extra money. And there are systems in trading, there are strategies where you do that. But on average, no. If you set this, if the distance from here to here is 1%, look, I told you, the mistake I took, the trade I took by error that I thought was on my demo to test something out. How much did I lose? Exactly $1. That's exactly 1% of an account that started off with 100. Right? Now, the difference here is going to be probably what, 10p? Maybe 15p? 20p at best? If you have risked correctly, meaning the maximum loss you can take is 1%, which is exactly the maximum amount of money that you can lose and still have a good night's sleep without beating yourself up. So let's assume for one of you it's $10. Let's assume anything more than $10 you get upset. So if you lost this trade, you will have lost $10. From here, you're probably down $8 already. That extra $2 isn't going to make much of a difference, is it? You closing the trade there to save an extra $2, if $10 is your risk threshold psychologically, is not going to break you. Right? Type in the chat, let me know you agree or disagree. And so you just ride the trade out, because now when you're coming down on this downward slope here, your pleasure has now given way to what I was going to call pain. But in the words of Ivy, I like Ivy's word, so I'm actually going to change my curriculum from it saying pain to it saying pressure. And when you are in pain or under pressure, you want to stop what you're feeling, right? So if something is causing you pain, you want to stop it immediately. You want to say, stop now. Get off my toes. Pull the thorn out of my flesh. If you're in a relationship that is emotionally abusing you or physically abusing you, you want to end it immediately, don't you? If you're being bullied at school or at work, you want to leave. The human body, both physically and emotionally, is wired to reject stuff that causes pain. And so, if you don't set yourself up to manage losing without hitting your pain or pressure threshold, you do irrational things. Now, for instance, using the $10 example, at this point here in the trade, you are probably $8 down. If you can handle the pressure or pain threshold of losing $8 and still be sane, still be able to think rationally, still be able to make objective decisions, you won't be upset. Well, if I lose, I lose, $10, that's cool. But if you, on a $100 account, if you over leverage, meaning you took too big a position size. So for instance, on this trade, I traded 1 micro lot. That's the minimum amount of money that a broker will let you trade, which is why I started with $100, not $50 or less, because I need to be able to trade 0.01%, right? In this case, this was within 10, 20p, something like that, right? Whatever, 20 pips, whatever that, I need to be able to take that range of a trade and still not overshoot 2% of my account. So $100 is the minimum amount that I would advise anybody starts with. Now, you start with less, it just means there's certain trades you cannot enter because the amount of risk you have to take for your stop loss will go over 1 to 2% of your account. And so you have to walk away from that trade and find a smaller trade with a smaller stop loss. If I had risked $50 on this trade, meaning half my account, by the time we got here, I would have been down $40. Now, do you think my brain is going to react very differently to losing $40 as opposed to losing $8? Somebody answer me quickly on the chat. If your threshold was 10, if you're losing 8, you can still be rational. If your threshold was 10 and like some people teach you to do, you're risking 50. By the time you get to 40, you're thinking, I'm dead. My husband's or my wife is going to kill me when they hear that I've spent the grocery money for this week. I know people who have traded with their school fees, international students in the university in the UK. They've put £10,000 supposed to be for their school fees or their student loan money when it comes. They've put it in a trading account and over-risked, over-leveraged. And by the time their trades in drawdown, they're crazy. I've done it before. You know, my partner here at the Academy, Tokwe, and I have been trading together for a long time. There were nights in the early days where I would call Tokwe and be like, Tokwe, man, do you think this trade's going to turn around? At 3 a.m. in the morning, when the man should be sleeping in his bed, you know, and enjoying time with his family, we're calling each other like, eesh, wow, ouch. You know, should we close it now? Because you're now in your pressure zone. And when you're under pressure, you make bad decisions. And you do something like what we call the dynamic stop loss system. Let me explain. Let me write that down because I want you to remember this. You're going to laugh when you become experienced traders. We call it the dynamic stop loss system. And what it means is your brain now lies to you and says, well, even though I'm losing this amount of money, I haven't lost it till I close the trade, which is technically true. And it's false because at that point, you've lost the money. You may make it back in the same trade when price starts to go the right way. But as at that point, you lost the money. So there's no difference within closing the trade there and entering another trade 5 minutes later. You're still going to end up with the same net position. And so, I'll give you an example here. I need to be on this account to do that. So let's do this here. So this is the trade. This is the same trade I took, if I'm not mistaken. Yep, I entered there. Right? And my stop loss was there. So see, price came very close there. Price came very close to my stop loss. And then it went the other way. Now, let me find an example of this dynamic stop loss model. Oh, there it is. So let's assume that you entered a trade here. Let me draw the entry point. So this is the entry point. Can you see that there? So you entered there, right? And you expected it to go up. So that's your entry. The blue line's your entry. Right. So the blue line's your entry there. The red line is where your stop loss should be. Now on this account, because the balance of this account is $10,000, $10,151. 1%, I have this indicator here, which I'll give you when you start trading. It calculates 1% automatically for me. See that? It's told me that my risk at 145, just divide that by 10. Excuse me. My risk at 14.5 pips. At that risk of 14.5 pips, I should only trade 0.7 pips, 0.7 lots. Sorry, that's the size of the trade. So that's this down there. Let me get rid of this for a second. So this number down there, 0. So it's done everything for me. 1%, risk $101.50, trade 0.7 lots, and this is my position margin. And it tells me at this point, I would have lost 1%. I would have made 1%, made 2%, made 3%, made 4%. So I should be getting out here, right? The trade now goes against me. This is the point at which it triggers my stop loss. If I have risked correctly, if I have pleasure and pressure in balance, I say, well, yeah, $101, I can live without that. And you get there. If I'm your teacher, you get to a point where you can lose $1,000 and not lose sleep because you know you're going to make $7,000 the next day. Or you made $7,000 the day before. But imagine this person, rather than risking $101, has risked. Let me show you this. So yeah, this is how you. So notice I should be risking 0.7 lots, right? Let's assume I say, you know what? I'm so sure of this trade. Rather than 0.7 lots, I'm going to risk 3.5. That's times 5. So I'm risking now 5% of my equity. Save. See? So I've now risked 5% of my equity. And I'm now risking $507. By the time price gets here, I'm probably down $400. And my threshold's 100. I cannot afford to lose the trade. I'm thinking, I've spent my grocery shopping. And so this is what unwise, I was going to say foolish, but we've all been there. Unwise traders begin to do. I'm going to move my stop loss. Can you see what I'm doing? I'll move it here. So I'm sure it'll go back up. Type if you follow me. I'm going to move my stop loss so the trade doesn't end. Rather than just taking the loss and saying, I was stupid, let it go. And maybe you then calculate and say, okay, I'm going to enter now because I can now see where the price is going for real. So I'm going to move it here. And then the price turns and starts going up. You're happy. Yes, I was right. You know, then you put your stop loss back there where you should have started from originally, right? Then it starts coming down again. Can you see that? It starts coming down again. And like, ooh, because now you're in pressure. You're past your point of rational thinking. You're dealing with more money, and it works with pleasure. I'll show you again. You're dealing with more money than you're comfortable dealing with losing. So you move it again. But this time what happens? It goes further. And then you move it again. Now you're going to lose 9.2. Let's move it here to this point. At this point, you're going to lose 10% and $1,000. And it's still coming down. Let's assume you close there, you feel sick. I lost $1,000. But some people say, no, I'm sure of my trade. They move it again. It comes here, it bounces, it's going up. Yes, I was right. I'm going to make my money back. And then what happens? It drops again. And now this is all in one 15-minute candle. This entire drop from here to here happened in 15 minutes. It's moving so fast that you probably don't have any time to correct it. Or if you do, you move it even further again. Look, now you've lost, or you're going to lose how much? $2,418. That's what you call making a bad situation worse. That's what the Jamaicans call throwing good money after bad. I have a phrase for this. Don't turn a trade into an investment. You are not investing when you're trading. They're two different things. You invest for the long term. You trade for the short term. You can't be married to your trade. It's not till death do us part, literally. That's what your stop loss is there for. And people say, well, I know where my stop loss should be. I like to close the trade myself. No, you could go to the toilet and come back and it's happened. I've seen that happen with somebody in our group where they lost all their account because they literally went for 30 minutes to look after a spouse who wasn't ill, came back, and because they didn't have a physical stop loss, the trader had taken their whole money. But also, nobody likes losing. And when you're out of your depth with your risk, with your pleasure pressure threshold, you're going to make on. So you're either going to close this, for instance, or you're going to close the trade too quick when it could still have gone your way and hadn't yet hit your stop loss, or you're going to keep moving the stop loss. So that's the dynamic stop loss management system. When you hear it, that's what we're talking about. We make fun about it as experienced traders. So if you hear a trader say, I use dynamic stop loss management system, it's not a good thing. What they mean is I lost far more money than I should have because I kept moving my stop loss. Now, at this point, you finally say, you know what? I quit. I've lost $2,400. My life is over. I'm going to file bankruptcy. You won't, but that's what you're thinking at that time. It'll never be the same again. I want to go to heaven, all that stuff. And then you allow the trade close you out. And in the next 1 hour, because 4 15-hour candles are 1 hour, in the next 1 hour, price goes back up. And you tell yourself, if I had stayed in that trade, rather than losing 2,400, I will have lost 1,000, roughly 350. In essence, I have just thrown away $1,000. That's what you're telling yourself. That was stupid of me, right? Okay, now that it's going my way, I'm going to get back in the trade and try and make the money I lost. As a new trader, this is my rule for you: 1 trade per day. If you lose, you lose. Even if the trade turns around and you were sure it would, get used to losing money and walking away from it and coming back with a fresh mind the next day before you start learning to pivot on the fly. Because even if you stayed in the right 1% risk, once you see this moving again, oh, now it's going my way, I'm going to jump in. So you put your entry there. You put your new stop loss there. So that's another, either another 1%, or if you're over leveraging, another 5%, whatever it is, 10%. And then what happens? It starts coming down again. Now you're scarred from the last issue. So now fear is kicking in. You're scarred from the last situation. You're like, you know what? I'm not going to wait for it to lose me all that 10% or whatever. I'm just going to cut it here. So you cut it there. Yeah, I've had enough. Then it goes up again. Then it comes down again. You're like, nope, nope, nope. You're not going to trick me. I'm not losing my money. Then it really goes up. See, it goes up, comes down, and it goes up here. At this point, you're like, man, if I'd stayed in, I would have made $1,000, $980 here. So at this point, which is where rookies usually, your brain is usually going to force you to take the wrong decision at the exact point where price is turning. In fact, the experienced traders know this. We've looked at this. There's a reason price is turning at those points. Does that make sense? The market makers are designing price to turn exactly at those points to maximize your emotional response. And so you come back here. I'm going to enter here now. Now to enter there, your stop loss will probably be here at the previous low. And it comes back down again. And you're fed up. Now this is over the course of an entire day. See, this entire choppy motion from here to here. Actually, that was up till here, right? So from this point to this point when price finally moved is a day and a half. This is from midnight on Wednesday, Tuesday going into Wednesday, to the afternoon on Thursday. If your pressure-pleasure balance is out of whack, you can literally lose your mind. I'm not joking. Trading is real work emotionally. You can literally be climbing walls. And then you finally say, I've had enough. I'm done. You shut it down. By this time, you probably lost like 10% or more because you've either been flip-flopping or over-leveraging. And then you come back in the evening on Friday. You come back at this time on Friday to see, let's see what on Thursday, sorry, let's see what happened today. And you realize that you missed this entire move. How many pips is that? Let's see. That is 100 pips. Large. And you're angry, you're frustrated. You're like, I could have made money, I lost money. And notice, remember when you decided to enter here at this point where you thought, you know what, this is where I should enter. This was back here now. Notice from this point, you were right. See, that's exactly where you should have entered. That's the price you should have entered, but you were a day early. And that's fine because you don't know when price is going to move. But if you had only risked your $10 here, or for this account, your $100, because 1% of this account would be $100. 1 second, let me see. So that would be, so 1% here, so that would be $100. Even if this was coming down, even at this point when you would have been, let me see, you would have been, no, it's still resizing it to $100. 1 second. So that's 0.28 lots. Okay, so let me put 0.28 lots. 0.28 lots. Right? So at this point, you would have been losing. That's still resizing. Okay, now save. Okay. So yes, at this point, you would have been losing $71. But because it's within your pressure threshold, you're not going to lose sleep. You're going to allow the trade finish. And if I lose $100, I lose $100. That's my threshold. And then you come back and voila, you have won $200. and you're happy, you're excited, but that's because you managed your psychology correctly. Does that make sense? Type if that makes sense. I know I went on a long rant about that, but it's really important. Now, the opposite can be true. Let's flip this around. Let's assume you started the trade correctly. So this is the point at which we enter the trade. Remember, this here is where we enter the trade. So let's assume you correctly decided to sell. Right? You correctly decided to sell. Let's put back 1% risk. So again, your stop loss is there. That would have been you losing 100. And all of a sudden, and every once in a while that happens, almost immediately your trade starts moving the right direction. You say, man, I am a bad somebody. You know, I'm BAD. I'm all that and 3 bags of chips. I was correct. Ain't nobody fly like me. I know what I'm doing. I'm the hottest thing this side of sliced bread and all that stuff. What this is doing is the previous example of losing was producing pain or pressure. This is now producing pleasure. And you're like, this is good. Now, this is the problem. Again, if at this point here, if you're winning $100, if $100 is within your threshold, if you're not going to lose too much sleep about losing $100, you're also not going to be too pumped up about winning $100, right? Type if you agree with me. So you're not dealing with money to the point that you're so worried about, I don't want to lose what I've already made. Oh boy, I'm going to pay my life or my mortgage with this. And so even when you're making money, making too much money is dangerous if you're not used to making that amount of money. If $100 is going to kill you, if you lose it, if you see yourself making it, you're going to become too comfortable. And so here, like, whoa, I'm good, man. It's going down. I'm good. Now, on this trade here, originally when I analyzed it, I think many of you guys would have seen the analysis I put on the group. This was the analysis here. I expected the trade, this to come down here and then move. By the time it gets here, I'm up 3%, $300. What if I say, look at how this just dropped, boom. See, this is one of the worst things that can happen to a trader when you see this in your direction or against you. It works either way. If it's against you, you get so afraid you take wrong decisions. If it's in direction, you get so self-confident that you take wrong decisions. I say, you know what? I'm not coming out here. I'm going to wait till it comes down here and make more money. And then what happens? Because you're enjoying it too much. Or rather than wait for it to come down here for $300, by the time it gets here, which would have been almost 200, so this would have been 186. You're so tripped about $186 that you don't want to lose it. Maybe you want to put it on Instagram or Twitter or on our trading group to show everybody that you're a good trader and I made $186 and I'm not going to wait to lose the money. And so the moment it starts coming back up here, you get afraid and you close the trade here. I'm just going to keep my $100. You just close the trade here because you were making more money than you're comfortable managing dispassionately. Just close it there. Boom, taking my money. And then in the next 15 minutes, and this happens all the time, you literally get sick watching your $100 turn to what would have been $300 if you had just stuck with the plan because your pleasure threshold hadn't been triggered. And then what usually happens by the time you get here, because we now see that this has reacted here, but in real time, this wick going back up would not have been there. There would have just been a straight black bar all the way down to that level before it reacted back upwards. And so you say, you know what? I want to make some of the money I could have made. and then you then enter a second trade there. Can you see that? Or maybe even here. You enter a second trade there, saying, I want to get the money I lost because I closed too early. And then what happens? Price begins to go against you. Now, remember, you only made $100 when you should have made 300. Remember this? You should have waited for 300. You only made 100 because you were afraid of losing the money you were making. Your pleasure threshold had been triggered. You wanted to save what you thought you'd made. So now you're only $100 up, and you give that entire $100 away in about, I don't know, 2 hours. Because price reacts against you. You're like, oh, snap. And at this point now, you're back in pressure or pain. And as you can see, price is designed to bounce you between, because it never or almost never goes straight up or straight down. Even when it's going up, we looked at this in the Forex Foundation tutorials. Please watch them. Please watch them. Even when it's going up, it goes up zigzags, up, down, but still going up. When it's going down, zigzags, down, up, down, up. So your emotions are going to be fluctuating all the time, even when you're right, and worse when you're wrong. And so you need to make sure, going back to our notes, you need to make sure that your pleasure pressure balance, again, you see, these all do the same thing, or they're all caused by the same thing. Over leveraging, over risking. Actually, one second. No, now I remember why I did it that way. That should be here. That should be down there. That should be down there. Because this arrow should start from there and go there. And yeah. And this should do that. There we go. Nice. And so the first thing that causes this is over leveraging and over risking. In fact, let me separate them. I want to give you the list of things that you can do. Because I'm so nice, I don't want you to go through the same pain I did when I started 13 years ago. So the first mistake most people make is that they over leverage. And you're going to see that all these things have over in them. They either have over or under, I should say, in them. Is over leverage. The second common mistake that triggers these four emotions is the one we had there up just now, over risking. I should say it too. Over risking. The third thing, again, is an over. Who wants to guess what the third thing is? Type it in the group, or take yourself off mute and just say it out. Who wants to guess what the third mistake? Again, it starts with over.
Overreacting.
Well, they're all of them make you overreact. But it's a technical term. Leverage is a technical term. Risk is a technical term. It's over trading, where you are taking two, like I told you, for instance, because your buttons had already been pushed on this one, what should have been one nice simple trade from here to here for 3%, and another nice, then you flip it around, you've hit that target, and you start another nice simple trade here, right? For another 1, 2, 3, 4%. And so over 2 days, you should have taken 2 trades, or 3 days, sorry. I mean, how many days is this now? Yeah, so yeah, over 2 days, because you enter this one. So over 3 days, sorry, you should have taken 2 trades. One on a Tuesday, into Wednesday, and then one on a Wednesday or Thursday, here at this point, into the end of Thursday. You've turned that into 5 or 6 different trades, right? Remember, you would have taken this one and got stopped out there because you were leveraged. Then you would have flipped it around. Okay, I'm sure it's going up now at this point. Then you would have lost that again. Then you want to make your money back again. Then I'm sure it's going down here. Then you lose again. Then you flip it around again. And maybe at this time you're right, but then by this time you're gun shy. So it starts moving around again. You just close it. So what should have been 2 trades is now 4. And your brain is tired. Or like if you guys have noticed, over the whole of this mentorship period, for those of you who've been around for a while, I have only ever given signals on one pair, Euro USD. You know why? 13 years of experience, having traded money for the people up onto 6 figures, up until almost 200 grand. I only trade one pair at a time. My primary pair is EU. If I don't see anything in EU I like, I will either wait for a setup, or when I was trading a fund and I was, I had to give results, I will look for maximum one other pair, and it was either AUSD, Aussie dollar, or USD CHF. Before it was EU and GU, when Brexit started, I just stayed away from the pound. Literally, because I'm a Brit, I'm emotional, I love my country, I don't like seeing the pound go down. So I told myself, stop trading the pound. So you don't trade what you hope as opposed to what you're seeing. I know people who have like 10 trades open at the same time. I'm like, dude, how can you track that? It tells me you're just trading patterns and trend line breaks and things, because if you are truly analyzing price action the way we teach you to, it should be hard to keep 10 different sets of price action in your brain at the same time. And when one is losing, one is winning, and one is winning, one is losing, and it just messes with your emotions. And so when you overtrade, you're going to usually, and also, if you are risking 1% on 10 trades at the same time, somebody please type in the group how much you're really risking. You say, oh, I'm only risking 1% per trade, but you have 10 trades open simultaneously. How much are you really risking? Somebody type that in the group for me, please. That's right, Edna, you're risking 10%. And so you are outside your pain, pleasure, or your pleasure, pressure, or pleasure, pain threshold, right? And you are in the realm of either fear or greed. If you're winning, you're in greed. If you're losing, you're in fear. Someone say on the trade, someone say overtrading. Type it in the group, say overtrading. The fourth thing which triggers these emotions, or the balance of these emotions, actually, this is an under. It starts with a C. Under something that starts with a C. Who wants to guess what it could be? Under something that starts with C. It is under capitalization or under funding. It means that you have put too little money in your account and you want to get too much. When you see people they won $1,000, for instance, when I was trading that fund last year, and you would see me post a trade in which I quote unquote won $1,000 or $5,000, which would be 5%. You're like, oh, I want to make $5,000, but honey, your account only has $100 in it. So I could make 1% and make 1,000. You would have to make 1,000% to make 1,000. And this is why it's dangerous to compare. you don't want to be guilty of undercapital. In essence, the capital is what you invest in a business to make what you think you want to make. If you think that $1,000 is within your pain and pleasure ratio, then put $100,000 in your account. And the only way a person will be comfortable losing $1,000 on a regular basis is if they have 100,000 or about that amount of money to spare. So you either start with what you can afford and scale down your expectations, or you start with the expectations and then you scale up what you can afford. But they must always be in balance. If you have these 4 psychological drivers in balance, you will more or less be fine in your journey of trading. If you don't, God help you, because I certainly can't. And that's why I am going to be on your neck. I am going to be mean. If you send me a trade you're winning and I spot you've over leveraged, over risked, you're over trading or under capitalizing, I will shout at you. I will type in all caps. I will say, close that trade, even if I know it's going to win. Because no human being can consciously control these 4 emotions. You hear what I just said? You're like, but you've been teaching it. Nah. So why are you teaching us about this if we can't control it? I've got an answer for you. Who was shocked by the statement I just made, that I acknowledge no human being can control these 4 emotions? Who was shocked by that statement as to why I spent an hour talking about stuff to teach you that I'm now saying you can't control? If it shocks you, type in the group. Or if you agree or disagree, do you agree or disagree that fear/greed and pleasure/pressure are very hard to control intentionally? Because they're human nature. Right, Ivy, right? They're human nature. The only way, or the only thing you can do, is manage them. 1 second, let me put all this here. So you got this 90-90-90 rule. That's every time I think about that, because I used to practice that rule. I once turned the trade in which I should have lost $50 into where I lost $1,000 over 2 trades, and I was sick for days. And then 3 days after I lost the money, the trade went the way I thought it was going to go eventually. Yes, I wanted to shoot someone. I moved my stop loss for 3 days until I turned the $50, or no, was it $100 loss into $1,000. So you don't control these 4 emotions. In fact, you cannot control an emotion. No human being is wired to control your emotions. I think I'm setting some of you free now. Now, don't go tell your spouse or the people in your life that your trading instructor told you, I can't control my emotion, that's why I'm out of control, deal with me. Nope. You can't control emotions. But you can manage them. Someone say manage them. You must manage them. You can't control your emotions. You can't. Actually, no, that's wrong. You can't control your emotions, but you can manage them. In essence, you can put things in place that says, I feel this emotion. It's not going anywhere, but I am going to manage my response to it. You know how you manage emotions? It's a word that starts with H. Who wants to guess what it is? It's the H word. And it's not a swear word, by the way. Somebody take a guess. Well, no, not help. You can't help the emotion. The emotion doesn't need help. You can get help, yes. If you're about to lose your mind, you can get help, literal psychological help, but that's not the word I'm looking for. There's something within your control that helps you manage emotions. It starts with hate and it rhymes with rabbit. Yep, it's a habit or habits. You manage your emotions by habits. In essence, you develop a set of consistent behavior that is designed to take away your susceptibility to greed, fear, pleasure, and pressure swings. And what are these habits? The same thing I've been talking about. You trade only at certain times of the day. You keep your risk as a new trader, maximum 1%. As an experienced trader, maximum 2%. You keep your risk to reward ratio, minimum 3 at optimally 4 and above. You don't move your stop loss ever. You don't re-enter a trade when you're a new trader when you lose. You take the loss and you go. So you have to build a set of habits that become second nature, because if it's not a habit, when you see price moving, for instance, on Friday, when I initially gave that first signal, before I changed it in like 1 minute, 5 minutes, whatever it was, I just woken up expecting something to happen. It was happening. And I immediately said, hey guys, I don't want you to miss out on this. And then my habits kicked in. Check this, check that. Does that make sense? I now have a subconscious checklist. It starts off with you write it on your wall. And I'm going to give that to you guys. Checklist. Before I enter a trade, check A, B, C, D, E, F, G. Over time, it becomes a habit. And as I began to check those things, I said, no, sir. This is not going to end well. And so my habits told me, or stopped me, sorry. So I will only trade this kind of stuff at this kind of time, in this kind of way. I don't do this. I don't do that. And that's why you start with a demo to develop muscle memory, to form good habits, such that when you start trading with real money and your greed and your fear start to kick in, and your pleasure and pressure, because they never disappear. You just manage them. Your habits will bail you out. And so as we start this journey together, I'm more concerned with your habits than your results. I will score you not based on how well your trades do, but how well you follow rules. Because I know that if you follow the rules over time, over 6 months to a year, you will be profitable. Every trader will have at least once in your trading career where you lose 5 trades back to back. It will happen. I just hope for you it happens on your demo. But even if it happens on your live account, you'll have only lost 5%. If you then win, and everybody too will have times, and hopefully more than once, where you win 5 trades back to back. If you're doing minimum 3% or 3 to 1 RR, and at least 4 on a good day, you'll have, so 4 times 5 is 20. You'll have 20% of a gain against 5% of a loss. Let's assume you keep fluctuating. You lose 5, you win 5, or you lose 1, you win 1. Over the course of 10, even if you alternate them, you'll have lost 5 and won 5. You'll have been down 5%, up 20%, overall up 15%. 15% every month is superstar. Forget the guys who are telling you the stuff they show on. Very few traders do consistently over a year more than 15% a month. And with compound interest, that 15% can shoot through the roof. But you got to form the right habits. Any questions? Now, please type the questions in the chat so that we don't affect the recording. Type the questions in the chat. I'm going to answer questions for a little while. And I'm going to let the other guys know while we're doing this that the experienced guys can show up now for the live analysis. Can you still see my chat, guys? My charts, sorry. Can you still see my charts on the screen? Cool. So any questions? Okay. So I've taught that so well. You guys have absolutely no questions because I'm the most amazing teacher in the whole world and everything is clear, right? Right. Someone's saying, not a question, but you can see how this relates to every aspect of life. That's true. You remember I told you guys at our last session, I told you guys at our last session that trading is one of the most character shaping endeavors you can ever take on. That trading did more to fix my character flaws for me than almost anything else in my life. Because you can't succeed at trading with certain character flaws. It gives you real life feedback. Trading shows you in dollars and cents, pounds and pence, exactly where you stand in your character. It will tell you whether or not you're actually good at sticking to rules, or whether if you have mental health, if you have, let me put it this way, and when I say mental health, I don't mean as a stigma. I mean things like anxiety, depression, childhood traumas. If you have mental health speed bumps you have ignored, trading will show them to you, because you'll find yourself reacting in dysfunctional ways and wonder, why am I doing this? And then you can begin to backtrack and figure out what's wrong with you. And so trading is an absolutely brilliant, beautiful thing. I love it. It's literally changed my life, and not just by the money I've made from it. Okay, so in the absence of questions, we've actually gone on now for at least an hour and a half. I think I'm definitely going to defer the live analysis session to tomorrow or later tonight. All right, guys, so it's been live. Literally, we have been live, and it's been live hanging with you. Take care. All the best with your trading journey. Stay home, wash your hands, social distance, use plenty of hand sanitizer, and I'm not going to crack the vodka joke this session. Take care. Bye-bye.